also joins us now. Let's connect with him. Mahantesh, this market is getting rusty, technicals are getting sticky, and global cues are now not looking all that solid and strong. Do you think the best part of the market for next couple of weeks and months is actually behind us?
Yeah, I think so because you have seen a lot of volatility in the market. Markets have been rising up, going down, partly due to a lot of geopolitical tensions coming in, due to results flowing in, and a little bit on uncertainty related to the U.S. Fed policy as well. So all these events compressed together have come about in the past 4 to 6 odd weeks, and of course, huge volatility in the market with the net market trend lowering. I guess now the future ahead seems to suggest that we can look for a better market days ahead.
Kunal, we've not done anything for the entire week now. I would say actually for last 2 weeks now.
Yeah, Nikunj, in fact, you can probably extend this to entire month.
Yeah,
this is the entire, so 25th of September, we were at 19,650.
27th September, which is 1 month ago, we were at
19,650.
Maybe
19,550. So 100 points plus minus is the broad.
And what's happened to small and mid cap during that time?
All-time high for sure.
No, the mid cap index is also flat. In fact, mid cap is slightly lower. 26 September, mid caps were at 11,600. Today we are at 11,350.
And small cap?
Didn't small caps hit an all-time high, the index?
In between, it may have hit a small all-time high.
Yeah.
So bottom line, we are jumping in the same place for last 1 month. So much so for so much of analysis and so much of commentary, right?
Should we take the next month off, Kunal? Are we going to stand here only?
No, I don't think that it's going to extrapolate for so long. But I think it's a good sign that the markets have digested so much of news flow, geopolitical, TCS result, Infosys result, and then over all the other banking names, etc. So I think it's a very mature sign from the market that we are not buckling under the pressure as such, which has been handed over from the global markets, not just geopolitical, even with the news flow across the US and what's happened to the US bond deal. If you look at the index, 0.5% down for Nifty and plus for the Bank Nifty, that would be taken with both hands any day.
Okay. The interesting trend today is Kotak, ICICI Bank, both are holding out ahead of their numbers. The numbers, of course, are tomorrow. We're only going to react to on Monday morning. But Kotak is significantly higher, actually, about 1.5%. Nooresh, do you finally see these sleepy giants picking up, or is it too early to say that?
So, too early to say that. If we look at Kotak Bank over the last say back in August, it made a bottom around 1760 levels. In September, it corrected down closer to 1700. And for the last almost a week or 2 weeks, it has been in the range of say 1780 on the higher side and roughly 1710, 1720 on the lower side. So it's been in the range of 50 to 80 points. So if we start crossing 1800 post numbers, that would be our first indication that there is some bit of a trend reversal. And if we go a little longer, for the last almost, say 3 years, say from November of 2020, the stock has made bottoms around 1650 and tops around 2000 for most of the times. So it's been a range bound on a 2-week basis as well as 2 to 3 year basis. So too early to call.
Okay, since we've got these two earnings lined up tomorrow, let me take it across to Harsh and find out what the ET Now poll is penciling in. We will get him in just a second from now. But yes, you'll have ICICI Bank, Kotak Mahindra Bank, both of them deliver their numbers tomorrow. And even though it's a truncated week with 22nd or rather 23rd being an off, or 24th actually, right?
24th.
What is Tuesday? Yeah. Okay. 24th being a trading holiday. You've got 25th, you've got Axis Bank, you've got Tech Mahindra come out with its numbers. Then, of course, you've got Asian Paints as well. And then, a slew of other numbers. You've got Cipla, you've got Maruti, SBI Life, DRL, Bajaj Finserv, all of these slated to come out with their numbers next week. That, of course, is the earnings calendar. Of course, shortly we will get in Harsh to highlight what to anticipate from both Kotak as well as ICICI Bank. But Mahantesh, we're awaiting ICICI Bank as well as Kotak's earnings performance, but suffice to say that the leadership stands with ICICI Bank amidst, of course, the private banking names?
Yeah, I think so. You can see that very clearly in the stock performance over the past year or so. Why year? Even if it could take a longer horizon of a 3-year period, then ICICI Bank seems to have stood out relative to the other private sector banks. And there's a reason for it. The reason being, I have mentioned also before that corporate banking is looking relatively better to personal banking. And ICICI has done quite a bit of effort on the corporate banking side. Generally speaking, the market views HDFC Bank as a personal banking kind of giant. They view at Kotak Bank as on the essentially focused on a lot of non or co-banking related kind of activities, whereas ICICI Bank is something which is kind of mixed. It is leaning towards the corporate banking side more relative to any other bank that I've just talked about. So yeah, it has been doing well, and I guess that going ahead, corporate banking will continue to be favorable part of the business for the banking sector as a whole.
Okay, in year to date and even the year before that, it's always been TVS which has actually won the cards. But do you think now the risk reward is favoring Bajaj Auto more so after the Q2 performance?
The Q2 performance was indeed very good, but then Bajaj Auto is dependent a lot on exports and export markets for its revenues and profitability. Much of it is also dependent on their exports to the African continent, with a big chunk also within that coming from Egypt. And now, with the tensions that are created right now in the past week or so, is not something which is good news for Bajaj as far as Bajaj is concerned. And I'll be a little worried about the progress ahead. So while the growth to profitability has been good, it could be mired at least for 1 quarter or so, is my expectation.
Mantesh, we had an interaction with the management of IndusInd Bank in the morning, and we've come back with the following: that growth will be 20%, cost of capital would start coming down, ROA would be 2% plus, and the stock is trading at a price to book of 2. Does it make sense now to say, okay, HDFC Bank is not headed anywhere, it's time to look outside the comfort of HDFC Bank?
Yeah, one should really look at the outside the comfort of HDFC Bank, simply because of the overall banking trend seem to suggest now that we are going to enter a phase where interest rates are peaking out. They've actually peaked out rather, because the RBI has not taken any repo rate increases for several months now. That said, what really happens is, as the interest rates to keep falling, the noticeable trend is obviously the margins compress. But with that, there is a kicker that comes in the form of volume growth, given that we have overall macroeconomic stability. So therefore, most of these banks are talking about a growth upwards of 20. Some are even talking about 25% kind of band in terms of their growth rate. So between the NIM compression and the volume trend in terms of advances growth, the latter would fairly compensate the NIM compression trend. And my expectation is that the growth will be so strong that when it comes to the OPEX and profitability arising out of that, can give a boost to the ROEs. So from a forward-looking perspective, most of the banks should be looked at a significant premium over the RO in terms of multiples that we offer to the book value. So yes, IndusInd Bank is one such bank which is doing incrementally better, while HDFC Bank is not. So the reason why you picked and why I tend to agree that this could be the case is because of the ROA trend. But let me say it this way, that we're not going to see HDFC Bank or the other banks actually fall off substantially from where they are in terms of stock prices. It's all about the premium that gets attached, or the expansion of premium over the ROA numbers in terms of price to book value multiple.
Right. Okay. In fact, on the subject, here's Nikunj's exclusive conversation